Okay, right? Now, if you look at this zone of the light, we have
Yeah.
this, the highest volume candle is right over here. Can you see
Mm.
that? Highest volume candle is right over here. But the reason why we could not break to the downside here is because this fractal was a low volume fractal. This highest volume candle at 2 a.m. open, and the
Mm.
candle which break above it was low volume candle below this one. So we know that, okay, here is the here we have the low volume breakout. Why do we have low volume breakout? Because at low, when we have low volume breakout, then the most high probability price is going to hold that candle. This fractal price going to hold this fractal until we're going
Mm.
to have the open of next session. But next session will retest or engage this zone again. If you are not the drawn liquid, if this has not been taken, then price is going to
Mm.
engage this zone again, and then you're going to have displacement, one more displacement to the buy side liquidity again, because price cannot reverse if it's not going to take buy side liquidity. Okay, this is the logic. It's a
Yeah.
simple fucking logic, right? You cannot just,
Yeah.
this is logic. If price is not going to take buy side liquidity, it's not going to
Mm.
go down. So you are
Yeah.
not going to be afraid if you're going to take this trade, even though if it's accumulated like a shit. I was holding this trade and price goes to the upside previous day. But the reason why I did not give you a signal on the previous days, because I was
Mm.
this was a lot of accumulation. I know that you're going to get frustrated or something and you're going to close or something like that. But price
Yeah.
delivered to the buy side liquidity
Mm.
finally, right? Then I did not notice this one because I don't know where I was busy. If you look at this one, this is ATM open already, like it's close to the ATM open. What we
Yeah.
get now, we know that we are gonna get high volume candles right over here again, but we want to see that this guy right over here, this is the highest volume candle right over here, because after
Actually.
7 a.m. we want to see that this 7 a.m. is the opening of the New York session. So we wait for the, because we know that this is going to give us a trade right over here to buy side
Yeah.
liquidity first, and then we're going to go down. If you want to go down, we're going to go down. Okay, so if you look at this zone, this is the highest volume candle. Now see the high of this volume candle. When we trade it through here, can you check the volume of this candle, if it's higher than this one or lower than this one?
Higher than this one.
Higher than this one. Now see, okay, we come here, retest it, goes up, it's going what, it's not displacing.
Mm.
Then what happened? Price drop, give us a fairly gap again, retest this candle again. If you look at this zone again, see, if you take the highest volume candle right over here, okay, now see that, okay. We are gonna focus on this zone right over here because we know that this guy right over here, I don't want to engage in this area. Why? Because this is high volume breakout. So high volume breakout are going to fail. Okay, high volume
Mm.
breakouts are going to fail here. So what we're gonna do? We're gonna wait and see that if in this down close candle, the highest volume candle, where is the highest volume candle right over here? And because retracement began here, so highest volume candle, this one is the highest volume candle, right?
Yeah.
But we know that this is already weak. So it will give you some pips. It's not like even if you have low volume breakout here, price is going to fail here, somewhere right over here, or it's going to sweep liquidity and come back on you. Okay? And then
Yeah.
it's going to take you out really fast
Mm.
because price will create SMT divergence. So this is the first high, then you have second high and third high. And after third high, you have what? Breakout to the downside. And if you break out below this one, the same candle becomes what? Mitigation block or breaker block. Okay?
Drink. Yeah. But
If you look at here, what happened?
mm.
See, after we closed below this candle, what happened? Price just distributed to the downside all the way. It never came back. It's just going down.
Mm.
Now, check it out. Why here? We are focusing here now. If you look at this candle, the highest volume candle was here. See, this was the fair value gap which we retest, but then it cannot hold. And this is also inversion fair value gap. So the bearish fair value gap, the bullish fair value
Mm.
gap. So this is also inversion level. So what happened? Price retested, and price could not deliver to the buy side liquidity. So what happened? Swing failure. Can we check SMT divergence here? Yes. Let's go check
Mm.
SMT divergence. So if you go here, we have GBP. Sorry, we have DXY, and we have GBP. Do we have SMT divergence?
Yes.
We have SMT divergence. So what happened? Price is SMT divergence. We have
Mm.
bearish displacement now, almost at silver bullet time.
Mm.
And if you look at here, that might be the reason that we have taken some liquidity there. Okay. So if you go to the daily candle, most probably you take the buy side liquidity somewhere right over here.
To this. When
2 days high,
setting.
right? Yeah, 2 days high. So what happened? Equal bodies, equal highs, and then you see price is not closing to the upside, not closing to the upside, and swing highs being created. So what happened? We close below it. See? Now if you go to 500 time frame again, what do we have? Come here on USD. Now, this candle, right? This candle. I'm also looking at this candle. If you look at here, this is retracement. If it stop here and fair value gap, and for example, let's say I fair value gap somewhere over here, then we see that, okay, if this candle, highest volume candle is here, right? So we want price to close below this candle low now, right over here. If price in this candle close below this candle with low volume, can you see, is that low volume again, right?
Yeah,
so what we're gonna do, it close below right over here. So these are now fair value gaps that you're trading towards the downside. So now you know that this fair value gap, if you look at here, you already have one fair value gap, which expanded price. Okay, you already have second fair value gap, which deliver price. So you should never get afraid of the third fair value gap, which is going to be respected, and also low volume breakout to the downside. Liquidity is being taken. You have SMT divergence. So this is the proper setup again. But if you're not going to take this because it's already 11 o'clock, it's okay. You know, because it's a Friday and you do not need that trade to do it. They give you probably the good trades are going to be here. Okay.
Yeah.
Now see that accumulation, manipulation, distribution, and then what do we have? Reversal. We do not have another expansion. Why? Because this guy was the low. This was the weak, and this was high volume breakout. So can you identify now the volumes? The highest candle in any session is the ultra high volume.
But in that ultra high volume, is it going to be, let's say, 2 o'clock or 8 o'clock?
In one session, we are going to get one high ultra volume candle. Most likely you're going to get it after 8 a.m. or 8:30.
Okay.
Right. So for example, if you come here, we begin with 17 o'clock, right? And then we have Asian session. For example, if you look at the Asian session here, right? Also, if you apply our own concept, this was a fair value gap. If you look at these fair value gaps, right? These are also low volume fair value gap. If you look at here, if you take the highest volume candle right over here, the candle which close above, that one is going to definitely with low volume. So that's also the high probability fractal. This is the fractal price. Everything here is a liquidity. So that's why price drop here and then move to the upside sharply. Right?
Yeah.
Okay. But see, our focus is on here. If you look at the Asian session, the highest volume candle, where's the highest volume candle? Right over here. That's the highest volume candle.
Can you show me another?
The lowest volume is here. This is the ultra low volume. You cannot even see this candle. Most likely you're going to see that at 17 o'clock, the ultra low volume. Okay?
Yeah.
Can you see that? Okay. Then you have low volume. Low volume is little above the ultra volume, like little above ultra volume. Okay. Then we have normal volume for a session. Normal volume is a little above the low volume, which is going to be like consolidation. And if you look at here, price was consolidating right over here. After the ultra low volume, price is consolidating. Then you have a high volume, right over here, right, which is above the normal volume, right? That's the high volume. If you see this is the highest candle and you have some consolidation here, then this was the high volume candle.
And we close above it?
Yes, right? After high volume, we are waiting. The ultra high volume candle most likely we're going to get after 20 o'clock. Okay. So if you look at here, when we get the ultra high volume candle right over here, But if you look at this zone right over here, okay, so if you look at this zone, you see that these are the candles with normal volume. Okay, the highest volume candle was here. So at least we are not trading Asian session, but let's say that if we are trading the kill zone, of course we're going to wait for a price to have a structure shift and all those things, right? We're waiting for a Jura swing. So after 20 o'clock, we want to see Jura swing. And also we want to see that where is the highest volume candle. So this is the highest volume candle. Ultra high volume candle is here. We are not trading Asian session. So we're waiting for a price to complete the Asian session. And then why? Because Asian session most likely is an inducement. In London session, we want to see that where is the good volume, because the most good volume is you're going to get is London session and New York session. But the New York session one is going to be the highest volume, highest than the London session. And we can engage in New York session easily. And also London session too. But New York session we can engage in New York session easily. Okay. So if you look at this zone, this is complete liquidity. So if I'm going to go to the London session, sorry, the Asian session, this was the Asian session. Lower the Asian session is here. Okay. So where's the midnight open? Right over here. And also after 2 a.m. Okay. After 2 a.m., where is the sell side and buy side liquidity? Of course, where we have the high volume candles, right? And ultra high volume, this zone. Okay. So what we want price to run. We want price to run one side liquidity. Okay. Then we are waiting for, after 2 a.m., we are waiting and we are looking for the highest down, the candle. For example, if price run towards the downside, we want to see that where's the highest down close candle. For example, after 2 o'clock, right? So we take the sell side liquidity, because if price takes the sell liquidity, there is our order block, right? So if you look at this zone, the highest volume candle is here. Okay, that's the highest volume candle.
Okay, so you want to find the highest candle inside the retracement?
Inside retracement, yes, of course. Then what happens? See, we tap into the fair value gap of the PM session, which is 159 range, right over here. Right? When we engage that zone, what happened? We have a breakout above that high, but this was high volume breakout. So I will not say that this is going to hold until we're gonna retest it. So I'm not doing anything. Now we know this is accumulation, manipulation, and distribution, right?
Yes.
You have a framework for a next setup, but I want price. Here I want confirmation from price. If this was low volume breakout, I would be just waiting for price to retest this and next low volume breakout, and I would enter. But I can do what? If this candle closed with low volume, I would just enter here immediately. Put my stop loss here. Without any worry, I will risk 0.5% and I will go for 1 to 2 RR. If this candle was low volume candle, because this is the highest volume candle, and this close above that with an even higher volume. So I'm not trusting that more. But now when this candle was engaged in the ultra high volume candle, right? Ultra high volume candle after 8:30. Now this is the highest volume candle. So if I'm going to pick that candle high and price close above that candle with a low volume, then I'm going to pick an order block of fair value gap in whatever right over here, and that candle is going to hold. Now we have a sweep of liquidity here. We have a market structure shift here. We have the low volume breakout in here, and now I'm going to pick a good fair value gap from this 50% zone, and the discount fair value gap is going to be here below 50%. So what I'm going to do, I'm going to pick this fair value gap and order block here, and then I'm going to play my trade right. Price going to retest us after 9:30 or 9:30 exactly, and then we're going to play our trade right over here. Put our stop loss somewhere right over here. The most safe stop loss is this one. If you apply risk management, it's good, 0.5% stop loss, and you're going to target 1 to 2 hours.
This example now is low volume.
Yes, this is low volume. Why?
This is the one you want to trade, not the high volume.
Not the high volume, because this will hold. No matter how much it's going to come back on you, it's going to hold. Okay, this is going to hold because the low of the day is confirmed now. So we're gonna target that highest price liquidity easily. So price come here one time, two time, doesn't matter. We're gonna get a century awareness right over here with GBP/USD, and you're gonna see again low volume breakout, and you can hold this trade even into 5 hour or whatever you like, even into tomorrow Asian session and London session. It's easy, okay? But the most likely you're gonna take 1 to 2.5 or 2, just watch, you are gonna off 75%, and then let the rest of it run to go for 3 RR or 4 RR or whatever you like. This will hold. And see, the same zone retested next day in a London session again. Low volume breakout again here, entry. I was not afraid of this one to take me out.
Yeah.
So this delivered again. Then I don't care. I'm gonna take my 75% off. The price when I come on me, there it come. I'm gonna put my break even. That's it.
No, we can't trade only low volume. We have to.
We will only trade low volume. Yes.
Oh, we
You're
can.
gonna see that. Yes. Because this is low volume breakout. If you look at here, see that? After 2 a.m., see exactly this candle becomes supportive. Really, really supportive. We couldn't even break it till New Year session. But after New Year session, what happened? We retest this candle, push. Really strong displacement to the upside. What happened? Buy side liquidity is
We have
engaged.
to take that buy side.
Yes. If we take buy side liquidity with high volume here, high volume breakout, most likely what we're gonna do, we are not gonna hold that zone. If we're gonna break and become, it's gonna be some divergence. It's gonna go down in history. Right?
Yeah, but of course the volume is just for confluence.
It's really, really good confluence.
Yeah.
If you combine it with fair value gap, you're good to go, right? If you look at here, this is the midnight open 1 a.m., 2 a.m. Okay. So for example, if you look at here, let's check it out. If you only focus on one side volume, you're gonna know that what we're gonna do in this session. And also a fair value gap. For example, let's say we are bearish, right?
Yeah.
We are bearish, we are trading high time frame fair value gap, of course, right? Let's say we are here. This is the 4 hour fair value gap. My focus is this one, right? Because price traded to fair value gap, so I'm gonna come to lower time frame. So what is the lower time frame? Right? 1 hour time frame. We also wait for our model. We also want to see our model. Okay, do not forget our own model. That's really, really important because you want to focus on you want to simplify your trading. You don't want to complex it. The more you complex it, you're gonna break your bones. Simple. Okay, so what happened? This is 2 a.m., right? So we know that there's going to be a volume. This is the 2 a.m. open price. Now, at Asian session, if I'm gonna go to 5-minute time frame right over here, in an Asian kill zone, okay? Remember, in Asian kill zone, I want to see after 20 o'clock if this fractal right over here, right? This fractal is a low volume fractal. Or, for example, right after this one, we retest this fractal and we break structure right over here. If any fractal right over here is the low volume fractal, then right after open price is going to continue to the upside for a while. Okay?
Yeah.
Then we're gonna break it. Okay. For example, if you look at here now, let's come to the Asian session. After 20 o'clock, we open price. Now, if you look at this fractal, Abdullahi, okay? This fractal right over here, okay? Look at this is the retracement, right? We take sell liquidity right over here. Big down close candles, highest volume candles. Okay, this is the highest volume candle. We close above it. Is there a low volume or high volume from here to here? The candle which close above it.
It's low volume.
Low volume. What do we have? Fair value gap. Price came back. Here, fair value gap, inducement, order block, entry. Buy side liquidity, 1 to 2 RR, easy. Again, where's the highest volume candle right over here? This one, we close above it, low volume. This is the whole fractal. These 1, 2, 3 candle, low volume breakout, high volume breakout again, fair value gap open, market structure shift again. What's gonna happen? Price come back. What are we gonna do again, Abdullah?
Continue. Sell side, yeah.
Right now we know that we're gonna get the highest volume and low volume again because we are in a kill zone. Right? We are in a kill zone, but the stop loss is almost here, right? So if you go for 1 to 2 hour, you already get 1 to 2 hour even down there. So 1 to 2 hour, 2.5. If you want to target 2.5, you can do that too. It's easy, okay? But when you have the target met, you put break even into your position. Now, in Asian session, we open the Asian session here, so we know that we're gonna get the volumes now, volumes. Okay, if you look at here, this is the fractal. This is where we start retracement. So in this zone, we're gonna look for the highest volume candle right over here. So this is the high volume breakout. So I'm not trading this, even though if this is holding the price, I'm not trading this. Okay, I'm not trading this. Even though if this fair value gap is a high probability, I don't care. I'm not trading this when price come back. But when price is coming back from here, right, the highest volume candle, I want to see a highest volume candle right over here in this zone. This candle right over here. If price close above this candle again, right over here, I have this candle. And that candle is volume is lower than this candle. Then if price going to retest this candle, I'm gonna buy it here again. And when we retest this candle, see that, Abdullah, when we retest this candle, 2 o'clock, exactly at 2 o'clock, now your focus is this zone, okay? After 2 o'clock, you want to see which one is the highest volume candle right over here, right? This is the highest volume candle, and immediately this candle is closed by high volume. So this fair value gap most likely is not going to hold, but of course it's gonna respect, price is going to respect that candle. Price respect that candle, it's okay. What happened? Price create equalize here, price goes up again. Now, again, if you look at this zone, right? We're not, price is not going to, since this fair value gap is weak, if price goes to the upside and we have some SMT divergence here, what's gonna happen? Price break this zone below right over here. So what is this? Market structure shift. Now you're picking the highest volume candle right over here again, right over here. This one, if you look at here, this one, and price close with low volume right over here again. So what we do? High fair value gap. Price respect that fair value gap, goes down again, right? Price goes down. So now what price gonna do? If you look at here, yes. What's gonna happen now? This candle right over here, price close below it. When price close below it, it's a low volume again. See, we retest that fractal, this auto block again, right? So what happened? At New York session, after 8 o'clock or I think 7 o'clock, what happened? Price close below this high volume candle, and the breakout candle is this one. So this fair value gap is a low volume. So what can happen is gonna hold. See that? Okay, for example, let's say that we are not engaging this price, right? Because sometime you're gonna see that 9 AM candle is going to go for the stop hunt again, like sweep of these zones again. One more time. So if you are waiting for a 9 AM candle open here, right? 9 AM candle open here, you wait for price because you know that this is the low volume breakout zone and this is the low volume market structure shift. So this guy is going to hold because if price come here, you're already trading it towards the downside. Right? We are already trading toward the downside. So what's going to happen? We are waiting for a price, and we are looking at fair value gap. Of course, we are not forgetting fair value gaps like, okay, this is just the zone and we're going to trade it. No, we're waiting for a price, and we want to see that what happened here. So we feel this become auto block right over here because it traded into fair value gap. It took buy side liquidity, and that open price is being violated. Now again, if you look at here, it's 6 o'clock. This up close candle, we've closed below this price right over here. So we wait for a price, and we want to see that if we can hold this, zone or not. That is auto block. So we wait for a price to engage in auto block too. So this is the first candle This is the second candle. Now, if you come here, we know that we hit our order block zone again, course, right? So 9 a.m. candle, this is the order block. See, big up close candle, and then we close it below it. Fractal price,
Yeah.
right? So what we do, we wait for price again. In 9 a.m. candle, open here, goes up, then moves away towards downside. So 9 a.m. candle is already like it put open, high, consolidation, and retracement in here again. But now we have high volume candle right over here. Ultra high volume. This is the highest. Most likely you're going to get the highest volume candle between 7 o'clock to 8:30. Okay?
Yeah.
So, sorry, 7 o'clock to 9:30. After 9:30, you're not going to get really highest volume candle. So now if you look at here, this is the BPR again. Okay? So we want to take the highest volume candle right in this zone, and then we wait for a price to close below 8. So if you look at here, the highest volume candle is here. And if you look at this candle closed below it, I think. So no, wait. In this zone, what happened? Price traded in this fairly gap, right? So we want to see that where is the retracement begin here. So highest volume candle is going to be
the red one in the middle.
This one. This is the highest volume candle right over here. But this candle, price closed really all the way in here. So if you look at here, see, you're waiting for a price to respect the bearish fairly gap, of course, right? This is again, we start, like we retest this candle and we start retracement in here. So if let's say that we know that price is bearish right over here now, okay? So if price give us a confirmation S&T that is in here, let's say on GBP/USD, price is closing a low volume, we are trading GBP/USD right over here. So let's check it out. This is Euro on the same day. If we have the low volume breakout on GBP/USD, we are trading the GBP/USD, right? What day was this? Tuesday 22, okay? So we are looking at Tuesday 22. Okay, right over here. This was the trade setup, right? That we took. Do you remember, right?
Yeah.
Okay, so we are here. Retracement begin here, right? So highest volume candle is here, this one, and also this is retracement too. So if you pick the highest volume candle and then we close below it, this guy right over here. So the candle which closed below this candle is here, and this is the low volume candle, low volume breakout. See that? Can you see this candle? The body closed below this candle right over here. This was the highest candle in this retracement. Because if you look at here, this was retracement, the beginning of retracement, right? Right over here. But then this was retested here. So what happened? We have fair value gap, we have taken sell side liquidity, and then we have equal lows, equal highs being taken here. We are waiting for a price to have some low volume breakout. This is channel state of delivery. Then we have high fair value gap in here. And if you look at again this zone right over here, most likely what happened? Price retest this one. So I'm already trading this one, okay? If you look at here.
Okay, so latest retracement.
Yes. So price will retest it. If you even put your entry in here, it's going to hold it. I send you an entry. My entry was here, but I told you the price most likely gonna retest it here. So my entry was already here. Okay, I was already in a drawdown when I sent you this entry, and then we hold this entry for almost right over here. When we goes for like 1 to 2 hour here, I told you to take some partial right over here.
Yeah.
Like this was like 1 to 2 hour. It was close to 1 to 2 hours. So I took For me it was 1 to 2 hour, but I think for you it was already like 1 to 3 hour. Here 1 to 2 hour already, because your stop loss was here and your entry was right over here. So you already for 1 to 3 hour, this was your entry, and you take like partials at 1 to 3 hour. How much you risk there?
This one you said 0.3.
Yes, you most likely made like 1%, right? And Then did you let the rest run right to the downside?
Yeah, after you said take, and then you said take partial.
Yes.
And
And then you
close.
let it run. Then you let it
Yeah.
run towards the downside.
Mm.
Okay, this was good. Then I took the last profit right over here. Well,
It
let me see.
continued to.
Let me go.
It
Yeah, here.
continued.
Yeah, yeah, right over here. I took this 50% of gold bake range. Here, this is my take profit.
Yeah.
Wait. Abdullahi. So
Yeah.
this is how it is. Now, if you look at the MT5 indicator, right, that I put you on, for
Yeah.
example. Yeah, show me the screen now, the MT5 indicator. You can share your screen. I think you can share your screen because I would see it like huge, you know. Go to 5 minute time frame. This is 1 hour time frame.
Can you see now?
No, okay. See, if you come here, okay, let's go here. If you come to this zone right over here on 5 minute time frame, on your USD, okay, or on GBP USD. Every time we have Jura swing, okay, every time we have Jura swing, right over here.
Let's see, 5 minutes on
Yes,
Tuesday.
yes, on Tuesday, Thursday. Sorry, 5 minutes on Thursday.
Yeah.
Come to Thursday projection. This was Friday. Okay, now see that. I was like, when our price is gonna have Jura swing, okay, towards the downside, it's gonna go below the red line all the way to the towards the downside. Okay, go below the red line.
Yeah, like this one.
Yeah, like this one here. If you look at this one right over here, price goes below the red line, and then it immediately go into the upside. Here, what we do, we create either a breaker block or mitigation block. Okay, when we aggressively close above the red line again after 2 a.m. open, and we are also looking at the high volume and low volume breakout. Whenever we're gonna have the high volume breakout in here, then we're gonna trade it. When price is going to retest the red line again. Okay, here.
On Thursday. Or
Yes, on Thursday.
only Thursday.
No, every day, it doesn't matter.
Okay.
Okay. If you look at here, see at this one, we engage the red line again, exactly at this high volume candle.
Yeah, I see it.
See
Exactly
it?
here.
Exactly here. So we retested the above in the zone above. This guy was original consolidation. If you look at here, we are hitting the high of the range, the highest line. We are hitting the highest line. So it means
Yeah.
that we are not gonna go above that. So we're gonna start retracement, and we are only making an entry when price gonna drop into the red line again. And if this is a low volume breakout in here, then we're gonna make an entry. Okay, we're gonna make an
From there.
entry, yeah, from here again, and we're gonna target again. If you look at this guy, sorry, what is this day? No, okay, here.
Thursday.
Yeah, Thursday. If you look at here, this guy, this is your first TP. See, when we come here, this was my entry because we have low volume breakout in here. In the same zone we retested, we already retested the red line here, so we do not need to retest it again. And this was
Yeah.
low volume displacement. So this guy is displacement because it reached the highest, the highest portion, the highest two lines. So this is displacement, and this was the equal highs. So what happened here? Price, when price create that breaker again in here, what do we do? We already
Right
are
on.
enter, yeah, we are already enter here on fairly gap right over here. When we have this breakout, when we price retest it, you will take the trade and we will target 1 to 2 hour or 1 to 5 hour or something like that, you know.
Every
Okay.
day this happens.
Yeah, every day is gonna happen. Every day.
New York or
Uh,
London.
every day doesn't matter. Also, I'm gonna put you another Ichimoku. Okay, you're not most likely looking at this, but I'm gonna put for high time frame. Like if you know that 1 hour time frame is bearish too, okay, then we are waiting for a price to do the Jura swing, and at 2 a.m. here, price going to go to the upside and go to downside. What day was this? This was like Tuesday 2020, Tuesday 22. Okay, so if you go to the upside here. Uh,
Tuesday, 22.
Yeah, 22. Uh, 22 here, right over here, right? 5 minute time frame. Okay, so what happened after 2 o'clock? See that, okay? Price goes to the upside first. Price goes really to the upside, okay? Then what happened? Then we close
Down.
below
Below the red line.
red line right over here. So now see, red line was not all the way to the downside. Then we retrace back again, okay? Above a red line, engage it, and then again, if we close below red line right over here, this is where our entry is, again to our downside.
With a low volume.
With the low volume. And if you look at if the red line is here, you have the 2 lines right over here. See these 2 lines really
Yeah.
close to each other. If price goes here and gives you wicks here and then drop into this below this 2 lines here, okay, these 2 lines here, this is the high volume confirmation trade that we're gonna play from here, and we're gonna drop into towards the outside all the way. Then
The
we're
one,
trading that.
the one in the middle you marked is the red line, right? On
Yes, this is the
yeah,
red line. We have
Right.
2 lines here and 2 lines here, lines here. This is where most likely we're gonna create like supplies and demand, and then price gonna drop close below it. Okay, because we already know that this is the displacement. So if you look at those wicks, those are exactly at these 2 lines here,
Yes, I see exactly.
and then we close below these 2 lines again. So here we have the confirmation trade towards downside all the way.
Yeah, I see the. Let me see.
Yes.
This is,
But we also, yeah, we also gonna apply that this is the low volume breakout. So this thing is going to make you extremely, like this thing is going to make you extremely, waiting for a price action. You're not gonna be getting. You don't have to get exhausted. Okay, do not get exhausted. This is the most important thing. Don't just get exhausted. And I will also be, for example, guiding you for time. If you look at here also, the one most good confirmation right over here with the 1 hour candle. If you look at 1 hour candles from 1 hour fairly gap, okay?
yeah.
What do we have? 2 candle up, 2 candle down. Or 1 candle up, 1 candle down. So strong and engulfing. You're selling and engulfing right over here. Okay?
Yeah, let me see. Tuesday 22. Yeah.
See that? Go to 4 hour fairly gap, 2 candle up, 2 candle down. Dealing range is being created. Either it's a one candle up, 1 candle down dealing range, or it's a 2 candle up, 2 candle down dealing range. And if you look at go to 15-minute time frame, whatever, you have the dealing range. For example, price will take buy side liquidity and price will take sell side liquidity. If you look at here, see, we take buy side liquidity, and then we take sell side liquidity. And this was the high volume breakout. So we failed high volume breakout. So where is the OTE? Yeah, here, that's the OTE. That's the 50%, above 50%. And exactly this candle close, you entry here, and then you target all the sell side liquidity, previous day low, and all those things all the way towards the downside. And then you can let it run too. If you make an entry here, already with low volume breakout again, this was your entry right over here. Even though if you make an entry here, this is your stop loss now.
I was yesterday and on Friday evening and Saturday I was back testing, and
of course this is just one. Listen, this is just one class on volume. I told you we have 13 volume classes, and if you understand every candle, you're gonna destroy the charts to the upside and downside. But remember, you're not gonna win it. If you get angry and you take another trade, none of this shit is going to stop you from losing your account.
Yeah, it's true. It's true.
Okay. Right. So this is how we're gonna trade it. Easy. There is nothing special in here. All we need is 1 hour time frame fair value gaps, and then on 5 minute time frame we want low volume breakouts from there.
This is 1 hour. I see 1 hour now. This one.
See that?
Yeah.
Asian session, we have one session liquidity, we drop into it, we have low volume breakout. So where is our breaker block? Right here. If you go to 5 minute time frame again, right over here, where is the low volume breakout?
After retracement, this is the high volume. Yeah, it's the same area right now.
Confirmation that we want to go to the upside even more. So this is where we're going to take our trade. Also, since I use a lot of concepts, right? But I focus on really few details on every concept, right? I do not do a lot of shit, you know. If you look at here, this is the Goldbeck range low. Can you see that? This is the lowest low of Goldbeck range. See, low, then we have high probability fair value gap. Then here, what we did, we have liquidity wide. So price tip into liquidity wide. In this zone, we have breaker. So where is the breaker? Low, taken, high, market structure shift, breaker. So the reason I take this trade, and the lowest TP for me is 50%, and then, for example, 2 RR, right? And then I also know that price is going to fill this liquidity wide. So my TP was here almost right over here. First TP was here, my second TP was here. So the high RR trade you have, the better trade is going to be. Okay. Since I use the Goldbeck ranges all the time, so I know that most likely price is going to travel there to the fair value gap or the low of the range, and then price is going to come back on me. If I was taking GBP USD trade, see, the reason why I was taking this trade is also because we close below the 50% here. See, this is the 50% of the range. Okay. No. I think this was the low of the, we close below the low of the range. So I know that from the low of that, when we close into the new range, we most likely gonna go to the 50% of this range at least. Then price is gonna come back on me. So when I took this trade, my TP was here. That's why my TP was here. So we went there, and then price come back on us.
Yeah.
Okay. Also, I do not trade all the fair value gaps. I only trade these fair value gaps. See, this is the fair value gap zone. See, FV zone, right? So what happened? We get fair value gap here. If this is low volume breakout, I was ready to take this trade too, but price did not come back into the fair value gap. My stop limit was here, and this was, I think, low volume breakout too. And USD is low volume breakout. So I know this is the break on GBP USD. So since it was confirmed on EURUSD, but GBP was strong, so what happened? Price went all the way to the upside. What I was targeting here, this zone. Price step into the first section, but then it came back. But immediately, of course, after 8:30, I look at this one. If this is the high volume breakout too, right? See, high volume breakout, price retested, price closed below it. I would take a short setup right in this breaker again towards the downside. To this zone again.
Yeah.
Can you see it? This is the breaker block. On this was the breaker fair value gap right over here. This was the order block which was holding the price for few taps. It's some 2-day divergence, so breaker block. So what's going to happen? Price going to expand. So if I'm going to take this trade, most likely I'm not going to put the stop loss there because it's a breaker block, right? So I'm going to most likely keep it here. This right over here, this candle, body of this candle, and then I'm going to let it run towards downside 1 to 2 hour. If risk is really high, risk management comes kicking. Risk management kicking. If stop loss is big, lot size decrease 0.5%. Lot size decrease the lot size. If your risk is the same, stop loss is 10 pips. Decrease. If now you are using, for example, for 5 pips, right? You're using your risk is 0.5%, and the lot size is 1. If this is 10 pips, okay, your 0.5%, your risk is 0.5%. So now what are you going to do? 0.25.
I use the calculator, the pip
Yeah.
calculator.
Yeah. Okay. So this is the risk management. The risk management kick in. Do not the account will grow slowly, but if you make risk management mistake, you destroy your winning trade here. This one too.
I will stick to 0.3 until I'm also done.
Yes.
I can start using
Yeah.
0.7.
Yeah. Why? Because if you take 1 to 2, this win. If you also take this win, then this win is going to even. Let's say the same risk is the same, right?
Yeah.
Because the stop loss size is a little big. Okay. So for example, if stop loss size is a little big, then you also, if you're taking 1 to 2 RR, then the 2 RR is also for example, if this is 10 pips stop loss, this is 20 pips when TP2. So this is the risk management then. Okay. Because you cannot just make profit of
Yeah.
the simple price action. You increase your win rate and all those things. If your win rate is above E1 60-75%, then the risk management is going to play the big role in this. Big role. You're gonna be like, if you apply these things, then you're gonna be successful, of course. Okay.
Yeah.
So this is the first class on low volume breakouts. And also, whenever, these are the lines, okay? For example, you have one line, this is the red line, then you have OT lines, right? Then the second line, you one line right over here. OT lines, if in the Judah swing it goes down, and then we have low volume breakout, buy here.
When it comes back to 2 line below the
Yes.
red.
Yes. Even if it comes to below the red line or close to this breaker zone or the candle which we have here, your stop loss is here and you're not going to be taken out. So all you need is Judah swing and your intraday is complete. You need Judah swing here, you're going to buy here. If your Judah swing was upside, you're going to sell into 1 hour 50 gaps and 4 hour 50 gaps. Simple. What else do you need? Nothing. But of course, we need high time frame analysis too, which I will provide, and as well as with overtime, we're going to, all the concepts we're going to repeat slow with each other, and you're going to see that how we can easily, apply those concepts too. Okay.
Yeah.
A little bit touch of daily bias, a little touch of weekly bias, and all those things, and 4 or 30 gaps, and you're a profitable trader.
Yeah.
Done?
Yeah.
Okay, so
After, I think this is the class will finish after soon. After we come back, you can put everything together and I can see.
Yeah, of course. Now see that if I'm gonna long in this week, of course, for weekly time frame, I need 4 hour time frame. Of course, this is a weekly free gap, right?
Yeah.
So this candle also did not close really the way I wanted it to close. I want this candle to close above here. But if next week candle open here, goes down, put some orders in here, and then come back in here, then we can also trade it towards the upside, the whole zone towards this PPR at least. Okay. If price then want to go to the upside, then it's also probably tradable. It's not like that. We're gonna look at this zone, but if we get some confirmation here, this is my target first, second target, and most likely third target right over here. Okay. So we're gonna apply those things slow by slow. Also we're gonna engage with each other on everyday basis. So even one class is enough. So on the next class, and we're gonna get on this volume 2 again, because once you understand the volume, and I'm gonna also give you like all the confirmation again and again. We're gonna put everything in a framework. Okay. So the framework is going to be utilized with time. So, but the most important thing is that the lower time frame confirmations. Again, the strategy and the volume breakout is really, really important. Okay.
Yeah.
Because all you need is just to know one fractal, strong fractal, to trade it towards the upside. Okay. So that's important. And also, you do not have to forget the strategy we have. Okay. If you look at here, see our model already unfold here. We sweep this low, right, into the PM session, right? PM session was bullish, so this was the probability that we're going to trade this candle right over here. Because if you go to your indicator here, you goes below the red line, you goes above this engulfing, so buy. Okay. So indicator is going to make you really like, you know, waiting for a trade setup. So you will be waiting, okay, if this is the wrong move, high volume breakout, and then most likely you're gonna mark the high volume breakout right after 2 a.m. open. So price will really fast. There will be a momentum shift or high volume breakout. Every time we have high volume breakout, we're gonna have momentum shift. If you look at here, this was high volume breakout. So what do we get? Momentum shift, SMT one is right above it. So I will trade it right over here. This was huge pips. This would be, I was not available, but I would have traded this setup.